because shockingly enough, we hear gold pukes below 1600 on massive volume. This is liquidation system-wide. Gold has been dumped back below $1,600 on the back of almost $100,000 contracts. Hello there, my friends. Chris Marcus here with you for Arcadia Economics on Quantitative Easing Thursday. May have just seen another video I did where it got into how the Fed to inject $1.5 trillion in a bid to prevent unusual disruptions. Obviously not coming as a complete surprise given that the stock markets just continuing to get hammered. Although, again, you would think with the Fed printing money, this might be the day that gold and silver investors have been waiting for. Although, as you probably already knew before you clicked on this, has not been the case. Here's gold. Started, it was around 1640 around the close yesterday. And then at 8 o'clock, just took off like it fell off a cliff. Down 80 bucks at one point. And then you see around when that announcement came out, it has rallied, picked up about $20 to $40. Now is back down at $15.80. And silver, the story is not much different. Again, you see silver. I always find it interesting how it'll just sit there right around the 17 handle for 2 days, and then, see at one point almost $1 lower, has rebounded a little bit. Certainly for people who bought gold and silver expecting Federal Reserve money printing, again, days like this, while not easy, have become more common because shockingly enough, we hear gold pukes below 1600 on massive volume. This is liquidation system-wide. Gold has been dumped back below $1,600 on the back of almost $100,000 contracts. As I dig into in the book I have coming out in a couple of weeks called The Big Silver Short, when you see just massive amounts of paper gold or silver hammered at once on already fragile markets. Again, my background was as an equity options trader, and we were specifically trained never to execute an order like that. I always imagine I probably would have been thrown out of my shop the same day if I'd ever done something like that, because if you're trying to sell something at the highest price, which most trading people who are trading usually do, you wouldn't want to put an order that's bigger and going to crash the market because you end up selling for a lower price than you would have gotten otherwise. So it's interesting to me. The Department of Justice has had a investigation. They've gotten guilty confessions from several bank traders, including at JP Morgan. It's been going on at least a year and a half, as November of 2018 is when John Edmonds got arrested. And I'm assuming that wasn't the first day. So probably started a little bit earlier than that. And gee, you sure wonder if they've ever looked into this. Again, if I can see it, it's kind of baffling to me how they wouldn't be able to see it. Yet, in case you're wondering what actually happened today, no, I don't think that people are actually selling their physical gold and silver. Are there some people that have margin calls coming and may have liquidated some things? Sure. Yet it's interesting, just posted an interview with Andy Sheckman of Miles Franklin, where he mentioned that even over these last couple of weeks, they've been selling, their silver sales have surged significantly. And when I asked him what happens on days like today when the price gets smashed, he says people keep buying because they know it's bullshit. Excuse my language, but that was how he phrased it. And I think that puts it into proper perspective. So again, probably not the easiest day if you're invested in just about anything, maybe aside from treasuries, but hopefully this helps a little bit. And actually, if you'd like to hear more about what Andy Sheckman had to say, that video is coming up next. So just click that button that appears, and do hope you have a great rest of your day.